Welcome back to the Wall Street Podcast. Today we're doing our deep dive, pulling out the crucial financial, economic, and policy developments that affect markets and, well, your daily life. Our insights today are drawn from key reporting in the Wall Street Journal, published Tuesday, August 19th, 2025.
And looking at the market snapshot, it seems like a bit of a cautious mood. The Dow Jones Industrial Average closed down slightly, 0.08% at 44911.82. Nasdaq Q managed a small gain, up 0.03% to 21629.77. S&P 500 also dipped less than 0.1%.
And rates, Treasury yield.
The 10-year Treasury yield is sitting at 4.337%. Oil's at $63.42, gold around $3,331.70. Euro at 1.1662, 1 yen, 147.88 per dollar. The journal's front page really covers a lot: big corporate moves, shifting regulations, some key economic signs, and, broader social changes too.
Okay, let's jump into some of those key corporate finance and government intervention stories. First up, Intel. SoftBank Group putting in $2 billion.
That's right. $2 billion, buying shares at $23 each. Gives them about 2% ownership. And this is happening alongside talks about the Trump administration possibly taking a 10% equity stake.
A 10% stake, how would that work?
By converting funds from the 2022 CHIPS Act, it definitely stirs up the debate around corporate statism, the government taking direct financial stakes in private firms, especially when Intel's facing pretty significant losses.
Oh, that's like
$18.8 billion in 2024 and another $3.8 billion just in the first half of this year, 2025. So.
Wow. Okay, also in corporate news, Newsmax.
Yes, they've agreed to pay Dominion $67 million. It settles that defamation lawsuit related to the 2020 election claims. It really shows the potential legal risks, the financial weight for media companies.
Definitely a hefty price tag.
Yeah.
And Soho House going private.
Looks like it. Investors are putting together a $2.7 billion deal. The offer is $9 per share, which is, quite a bit lower than its IPO price back in 2021.
Which is $4, right?
Exactly, $14. So a significant shift there.
Okay, let's pivot to economic trends and market signals. Home builder confidence.
Not looking great. The NAHB Wells Fargo Index, it dropped again in August, down to 32 from 33 in July. That's actually its lowest reading since December 2022.
And the drivers are still the same. High mortgage rates?
Primarily, yes. High mortgage rates and pretty weak buyer traffic. It just highlights those persistent affordability issues in housing.
We're also seeing some interesting shifts in dining, reflecting how consumers are behaving.
Definitely. Casual dining chains, think Chili's, they're seeing sales jump. But fast food, like McDonald's, they're talking about a bifurcated consumer environment.
Bifurcated meaning split.
Essentially, yeah. Some consumers are still spending while others are really pulling back. And interestingly, menu prices since 2019 are up about 34% in casual dining versus 38% in fast food or limited service. So value is key.
That makes sense. And what about this dollar paradox? The dollar index is down, but the S&P is up.
Right. It seems contradictory, doesn't it? Dollar index down 10% year-to-date, S&P 500 up 10%. But what's happening is foreign institutional investors are hedging their dollar exposure. They're protecting against dollar weakness.
While still holding on to U.S. assets.
Precisely. Especially for exposure to things like AI growth. They want the asset gains without the currency risk. It's a strategic play.
Okay, these headlines paint a complex picture. Let's tackle our key questions. First, what's the real impact of this government intervention, like with Intel, and these legal outcomes like Newsmax on major industries?
Well, the Intel situation, leaning on both private capital and potentially government equity via the CHIPS Act, it really shows this growing entanglement between public and private finance, and it fuels that whole too big to fail conversation again. Then you have Newsmax, which is sort of the other side, showing that legal actions carry real, substantial financial consequences, especially in media.
Okay, second question. How are these economic pressures truly influencing consumer behavior in different market segments?
The dining trend is a great example. That shift towards casual dining away from fast food for some suggests, varying levels of financial health across different income groups. And at the same time, that weak home builder confidence just keeps pointing back to the affordability crunch in housing, mainly because of high interest rates.
Got it. And third, what major regulatory talks could reshape the economy and maybe even our daily lives?
A big one is the White House push to change how carbon dioxide is defined. They want to move away from classifying it as a pollutant, which directly challenges existing EPA rules. This redefinition it's central to future emissions rules and likely means a long legal fight with big implications for energy and manufacturing.
beyond these big market and policy shifts, how do these trends touch the average person?
Well, one area is healthcare. We're seeing new treatments extending lives, like Novo Nordisk's Wegovy getting approved for MS, that's serious fatty liver disease. So more people, including terminal cancer patients, are living longer.
Which is good news, of course, but
But it brings new challenges. Chronic financial strain from ongoing care, for one. And then there's the emotional side, things like anxiety, that intense fear around medical scans and results. Separately, just the basic cost of living keeps rising. Estimates now suggest it costs over $300,000 to raise a child to 17, and that doesn't even include college. That's immense pressure on household budgets.
it really makes you think about how all these threads connect.
Yeah.
These corporate strategies, the regulatory debates, personal health challenges, household finances, they all weave together to create this incredibly dynamic and, frankly, complex picture of our economic and social world right now.